All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about 90 minutes, and a very interesting open in terms of what's going on. We are still kind of in this we're in this situation right now where the market is optimistic about some sort of positive trade war resolution coming out of the meetings that are currently going on. And, the market doesn't have a ton of news, relative to it. A little bit of speculation about, certain Chinese officials joining and, that being more positive than negative, but make what you want out of all of that. That's going to be ongoing and will obviously affect the markets here as we go forward. Overnight, we saw S&P futures trade in a fairly tight range for what has been. You can see up here 25.51 and 25.25, basically 25.24. As far as the range on S&P futures, and you can see that early on the open this morning we tested the lows, and right now we're going and testing the overnight highs. That's fairly typical action, to see on a day after a big update. We'll see the market tend to kind of trade within the range of futures overnight if there's not a new catalyst, and that's what we're seeing going on there. Now, we are dealing with a market that, is highly differential this morning. And, the analysts have affected the market here today in a fairly sizable manner. You look at some of the stocks that are up the most, the Amazons, the Microns of the world. There's analyst commentary driving those. You look at GM, up about 3% here this morning. Being driven. You look at things like a CSX, Railroad, or Kansas City Southern. Let me show it here. But a CSX, which, is had a real nice day on Friday. Down here about 1.5% this morning on some negative analyst commentary, basically lowering price targets for it, as well as with Kansas City Southern. But Kansas City Southern is trading on higher. So, we do have a lot of analyst, movements that are pretty obvious there. We still have the government shutdown or partial government shutdown going on. I do find it quite ironic. End of 2012, the last day of the year, there's a massive sell-off because the government was going to shut down at midnight, and it was going to be, it was going to tear things apart, and everything was going to be terrible. And then the government shut down. In fact, let me show it to you here, because the government did shut down and shut down for, as it was kind of expected. And here we are, 2012. Let's go with looking at the end of that year. We'll go to 2013. 0131 there. So we'll just look at the end and the beginning here. Maybe. Let's see, 2012, 01. There we go, 11. And we'll get the SPY in here. But the SPY was, basically we're looking at, okay, government's going to shut down, market sold. Last day of the year, gapped on down, was just bought up the entire day, and then big gap up New Year's when the government shut down, and pretty much just tracked higher after that. So one of those things where, government shutdown, is it really all that negative? Well, I'll let you be the judge, but the markets have really kind of gotten used to it, and overall, it's not historically been a very negative event, especially here over the last 10 years when those things have taken place. And yes, it does affect people. It affects things out there in a very large way, very sizable manner. But in terms of the overall market, not a huge effect there for it. Okay, but anyway, those are a few of the things kind of going on. Some of the positive analyst commentary on a few things that we talked about on Friday, like Masco, just continued to go higher Friday, continuing to go higher here this morning. It's just one where option value is not very great. But we are seeing that the analysts have some power, have some control here to start the year, which tells you there's enough differentiation in this market that there is, there are opportunities that investors are looking for and looking to put money into play. Now, for the challenge, I have Under Armour. Under Armour up about 40 cents here this morning, up about 2%. I don't know that there's a whole lot to say about it other than, it is tracking on higher here this morning. It's getting up towards that 20-day moving average, one where, if it were to track 30, 40 cents higher from here, I'd probably take it and look for another risk-reward entry. But I do think there is potential to see this thing up in the 19.5, 19.5, even possibly $20 area if the market itself is strong. But anyway, haven't seen any kind of real topping signs to it here today or anything like that, that has me looking to take it off. But, we'll assess that going forward. We have seen some good amount of implied volatility come out of the options. That's just the reality of the market. On anything going up and playing anything higher, that IV is, is going to get sucked out. And we are seeing that, not just in Under Armour, but across the board here. All right. So anyway, I'm not looking to go anywhere. There's some other things I've looked at this morning. Thought, do I take Under Armour and go get into something, like maybe a short on Pepsi? As you know, I'm still pretty bearish on Pepsi. But, no, not enough confirmation there, for me. I like some of the action we see in Halliburton, but Halliburton, Under Armour, very similar chart dynamics. U.S. Steel as well, kind of a little bit of short-term oversold condition, not worth really kind of going after. Very interested to see how the Boeings of the world, the Honeywells of the world kind of play out today. Some of these industrials, they've gained some strength here, in the last little bit. Was kind of hoping, maybe we see these things trade a little bit down, see some of the implied volatility on things like Triple M really kind of come on down, but we're not seeing that so far. We are seeing a little bit of that in some of the Bank of Americas and whatnot. But a lot of these stocks are at some pretty interesting levels where, I think today's lows, let's just say the market were to close right here, and I know we have a long way to go, but let's just say something like Bank of America were to close right here. Today's lows become a very interesting level, meaning if they get broken, there's a pretty strong risk that we'll see that next wave of sell. In fact, if you're looking to, you're not going to want to watch the headlines and, try to decipher the Chinese news, you can pretty much be able to tell that, hey, it's not good if, a lot of today's lows, early lows get broken here throughout a wide variety of stocks. I don't think you can say that about every company, every stock, but if you see that happen with Bank of America, you see that happen with CAT, you see that happen with an Amazon, for instance. But anyway, there's not much to read of in that right here. But bottom line, bullish percent index remains bullish. We've talked about last week some of the improving market internals. You can see how big of a jump the bullish percent index has had. It was a huge round on the bullish percent index. So while, yes, it's a big jump, it's, if you put it in relative perspective there, yes, it's bullish, and yes, it showed that market conditions last week were changing, and continuing on higher here today, which continues to bode well for the bulls, at least here, in the mid to short term overall. Now, this weekend, I was asked about some price targets on the market. And okay, where would we put some of the price targets here on the S&P? How high can it go, and all that kind of stuff. And I know that technicians and market participants like to play with price targets and whatnot. And we can go out and we can put some measuring tools and do all sorts of stuff to get some price targets in play. But one thing to keep in mind when it comes to price targets, it's very ambiguous. In hindsight, yeah, price targets, sure, but you see what was hit. You don't see all the price targets that weren't hit that would have been measured in those moments. So, I look at these with a grain of salt. I look at these and I don't read a ton into it. But you've heard me talk a few times about the possibility of coming back to these lows and retesting these lows. And in fact, when we saw some of the volume in the price action right here at the beginning of December, I made the comment that we may go lower from here. But the odds of not seeing this level again, in the next several months are they're very slim. And, just given what the price action we saw right in this area, I kind of just look at this market and I go, okay, upside potential is into this area. That's the upside potential. Now, does it have to get there? No, it doesn't. If there's real bad China-U.S. trade news, it's not going to get there right now. It'll get there eventually, but it's not going to get there right now. If there's good news, could it get there very quickly? Yeah, it could get there very quickly. It could be there tomorrow, right? But that's what I'm looking at as far as short-term upside. Now, we can make a pretty good argument of the 200-day moving average coming into play, though I don't know that it's all that relevant. And anything kind of in between here. I don't think this is going to be a market. I don't think this is a market that's hinged on levels. That is absolutely hinged and says, if this level breaks, then X, Y, Z, A, B, C. I don't think that's the case. This market knows. The market participants, the intelligence or the big money in the market knows that this market is extremely undervalued if we don't go into a recession. And it's pretty expensive if we do. And, in many ways, the China trade news is being looked at as the barometer for whether or not we go into a recession. And so, that can push things in a very big way, in a very kind of sizable way here. And, we can put all the technical targets we want, but, whenever you're looking at technicals and you're looking at targets, you have to realize that there's always another side, right? The bears are going to measure this, and the bears are going to say, okay, here was the sell-off. Now we're coming into retracement zones. Here's the full retracement right up here. Bears are going to look at that and say, hey, you know what? That's the sell area. That's the area to look at, really starting to, put on some bearish exposure or really get aggressive. Now, you'll notice that kind of corresponds to these lows from right back in November. Very convenient there. Coincidental? I don't think so. I think it just kind of speaks to the fact that this level does look like a kind of a natural target. That's also some of the lows we saw in 2018, and that's kind of where it makes sense, right? Where it makes sense. You can also argue the market rarely makes full sense, and you'd be right. You'd be dead on. You'd be absolutely right. But when we're talking about a retracement target this far away, that tells you what the drop was, and the magnitude of that drop really was. And we're absolutely in that bounce mode right here and right now. So as far as targets, great. Yeah. Do what you want with them, but those are what I'm looking at as far as, upside targets. If you look at something like the Russell, it looks similar. Yes, a little bit different. It has this, kind of descending pattern here in October, November, and then the breakdown, but it's getting up into retracement areas. If we look at the Qs, or the Nasdaq, however you want to look at it, let's just go with the Qs here, and you see it looks a little bit different, right? It's almost at these lows, so it's kind of, you could argue, outperformed a little bit, but that would depend on your time frame there. But and then if we go to something like the Dow Jones World Index, right? I mean, it looks pretty similar. There just hasn't been a lot of differentiation out there. This has been a hey, sell everything, oh, buy everything type of sell off and snapback. And for now, the bulls are still in control. The downside risk is still very high. In fact, one of you asked me last week if I still thought there was crash risk in this market. And the answer very simply is absolutely. I think there is a lot of crash risk in this market. But one thing to keep in mind is that it's very difficult, if not impossible, to go and find a crash before a day where the market closed at its lows. So most crashes, market closes at its lows, and then the next day, boom, right? So if we're looking at a market that's not closing on its lows, I don't look at it and go, oh, there's a huge crash risk at least that day. Now, something could change the next day or something like that, but it tells me, okay, there's a little bit of time. The chances of crashing when we're not closing at lows, it just historically you don't see it. So yes, it could happen, but that would not be the norm there, for that. All right. So anyway, that's kind of my take on a little bit of the levels, a little bit of the overall market action here, and a little bit here with Under Armour that I will continue to hold here today, and kind of see if we do see some topping signs come in. Here today, or we get up just a little bit more. I may just take it and look for another entry. More likely some of the not more likely, but the entries that intrigue me are some of the stocks that have pulled back a little, today. But there's not a lot of those, and there's a lot of things like a GM, that are just kind of chasing up. And are they in the best risk-reward scenario? No, they're not. But at the same time, will they benefit tremendously with a little bit of positive news? Yeah, absolutely. There are a lot of stocks kind of in that scenario out there. So I do have the exposure with Under Armour, but I may look to rotate that exposure a little bit, or flip-flop that just a little bit as we go into the close of the market here today. Thanks for hopping on. Have yourselves a great one. I will talk to you later. Take care.